Bitcoin just dipped below this white line here, representing a double dip. We haven't had a double dip literally since all the way back in 2019, and that didn't end very well. Things got pretty ugly after that double dip. Is that about to happen again, or is there a hidden message lying right in front of our eyes with this chart? Let's break it down. Welcome in if you're new. Phenomenal to have you. My name is Steve. On this channel, we keep it simple. We focus on just the facts, and I focus on helping you in this crazy world of crypto to stay level-headed and make better decisions which make you more money. If you're interested in those things, hit those subscribe button right now, put a thumbs up on this video, and let's jump in. So we're here on the weekly chart. Bitcoin US dollar index. We have price action above, and we have the wave trend down here at the bottom. Now the wave trend is incredible. This is the one from Lazy Bear, which has the most famous wave trend potentially on planet Earth. And the wave trend is screaming something very, very loudly about this double dip. But the wave trend is pretty simple. It basically helps you buy and sell with discovering overbought and oversold areas. It essentially wants you to buy when the wave trend is down here, and it essentially wants you to sell when the wave trend is up here. So now what we've got on our chart is this white line, which I put here, which is rated about 20, because what we've seen with every single market cycle with Bitcoin, this 20 level is everything. When we go back and study it, which we're about to do, you will see. But before we study it, I want you to take a mental screenshot. We dip below this 20 area, clear as day. Whether you're a Bitcoin bull or bear, we can't argue with the facts that are right in front of our face. We dip below here. This is a double dip, and we haven't had a double dip since 2019. Things are heating up. Let's take our journey all the way back here to 2012, right? 2012, bottom of the market, we're always getting some resistance at that 20 level. Happened right here in 2012. Fast forward to the next market cycle bottom here in 2015, 2014. What did we do? We held this 20 level as resistance. Happened right here, and it happened right here. Two different times resistance at this 20 level. This is very critical. We're forming structure here, which means at the bottom of markets, we hold resistance at this 20 level. Now, fast forward 2019, boom, fell below here. We're inside of here, and we had our first double dip, which, by the way, inside of our double dip, we held some resistance at this 20 level. Now, why is this critical? Because during our market cycle bottom, we did not hold a resistance at this 20 level. Why is that important? Well, we just got done with our market cycle bottom. What did we do? We did not hold a resistance at this 20 level. Can you see any here? I don't. So why did we have a double dip? Because we had a double dip back here to have this resistance at here. It means that the market wasn't finished with its final retest. So here, the market cycle wasn't completely finished. It had to come down and retest its base, and that was bought up heavily with these huge wicks here. It was very, very short-lived, and then the market skyrocketed after that. But we had to retest our base. Everything in trading is market structure, support and resistance. You can look at any indicator here. All of them are built around support and resistance in market structure. It's very, very simple. So what Bitcoin did, it's had its first double dip since 2019. Now let's take a deeper dive into this double dip and let you know what you should be ready for. And I'm pretty sure that there's a hidden message here. Also, at the end of the video, I'm going to give the strategy for the 3-2-1 strategy. I don't know if you've ever heard of it, but it's going to be very powerful. It's going to help improve your life in a great way. More to come on that in a moment. Now, the double dip. So Bitcoin re-entered right at about here. We had our pivot high of about 14K. We had our first retest of our current market structure at that time, which is at about 7.7K. We did have a nice rally after that, and then a further lower low. Again, everything is the trend. The trend is your friend. And what Bitcoin needs to do is break the trend, which we'll get into in a moment. But back here, it couldn't. It created a high here, but it was a lower high. So it created a low here, which was a lower low. It continued the trend. The trend is your friend until the end. And the reason we had this huge rally here, but we couldn't break the trend, it was still nothing less than a double top and the double top reversal, right? It failed to make a higher high. So the trend continued and we made a lower low, right? That's how it works. We're going to continue to make lower highs and lower lows. That's a trend until you break it. Once you break it, we form a new trend, and then we follow that trend until that's broken. It's very simple. Keep it simple. Everybody wants to overanalyze Bitcoin. Oh, what's it doing today? What's it doing tomorrow? It's up $7 down. Who cares? Focus on the bigger picture, focus on the market structure, support and resistance, and then stay level-headed. If you can do those three things, stay level-headed, market structure, support and resistance, you're going to be better than 95% of people in crypto. That may sound crazy, but that's a fact. The three things that we just discussed, the high majority of people in crypto cannot do those three things. They're focused on everything else. Oh, how can I make money today? Oh my God, it's up, down, down, sideways, stress, anxiety, boo, boo. That's how it is. And the high majority of people, but not you. You're going to stay level-headed. Market structure, support and resistance, better than 95%. Boom, easy. Now, double dip. So this double dip happened, right? And we ended up down here towards this bottom here. We're almost at the green line, which again, anytime you get even remotely close to the green line, it's an incredible time to buy. Don't just trust what I'm saying. Look at the facts in front of our eyes. Try to argue against buying near the green line. Try it. Oh, here, we were near the green line. Oh, that would have been a terrible time to buy. Oh, here, we're near the green line. Oh, this was a terrible time to buy. Are you kidding me? When we double dipped in 2019, if you bought anywhere around 7K to 3K, how do you think you're looking today? If you bought anywhere near 7K to 3K, when we double dipped, how's your portfolio looking today, a couple years later? You're looking like a freaking superhero. That's during the double dip. We're in the double dip right now. Did that just click for you? It should. Don't go based on my opinion. Just go based on the facts and the charts. We're in the midst of our double dip and we're getting down here close to this green line. I think you know what to do. It's pretty obvious. Could Bitcoin's price go down further? It doesn't matter. We just described from 7,000 to 3,000 is that kind of range that we were in during our double dip. That's a hell of a range to buy in a few years later. Same scenario is going to happen in Bitcoin. This seems like a very scary place. You know, we could fall all the way to our green line, which we talked about. We're potentially in some quicksand right now, which could be some turmoil. We talked about falling potentially to retest our base. All of those things could be scary, but you're really talking about a range of 7,000 to 3,000. We're going to have that same range where we're dealing with today. And a lot of people are going to try to time the market if it does go down, and they're going to get burned. They get burned every time. They're not focused on their three things. They're not. They're focused on greed, greed, greed. And those people get destroyed. There's a reason why historically 90 to 95% of people fail with investing. Historically, even if you go back all the way to the spice days when we were trading cows and spices, people got greedy. The people who remained level-headed and focused on the facts, they became incredibly wealthy because they knew humans are too emotional. Humans historically have always been too emotional with money. Anything that represented money, spice, cows represented money. Too emotional. Couldn't do it. So, okay, Bitcoin's price could fall. And we're still in this range here based on the facts and the charts where it seems abundantly clear what the outcome could be. Now, if you're a swing trader, your mindset's different than the long-term investor. You're looking to make some profits over the next week, maybe 2 to 3 weeks. As a swing trader, you're kind of in that pocket. So you miss a lot of these big trades that are happening in crypto because your mindset is not focused on the right thing. I guarantee if you look at your trades and you look at your portfolio, you look at when you started in Bitcoin and you look at all the trades you've made, I want you to ask yourself honestly, if you're a swing trader or you're a day trader, I want you to look honestly at the facts and say to yourself, okay, I'd made all of these trades. What if I just took all of my money when I first started and put it into Bitcoin and I didn't touch it? How much money would I have now versus how much I actually have? And I'm willing to bet that if you've been in this game for years and you've been swing trading or day trading, you probably would be at just about the same level, or you would have more money if you just put your money into Bitcoin and held it. But how much less stress would you have? Oh my goodness. So be honest with yourself and look at that. But now I want to get to the 3-2-1 rule. So we talked about in the last video how I've been focused more on my health. I did this 1 meal a day thing. I lost 30 pounds. I'm feeling much more clear, much more precise, and really ready to tackle whatever is in front of me. And I have absolute clarity of how to do it. I want to package that with this one. The 3-2-1 rule is built on top top of that 1 meal a day thing. I don't know if you've heard of the 3-2-1 rule, but it's pretty cool. I've been doing it for a little while now, so I wanted to share it with you. Starts with 3. 3 hours before you go to bed, don't drink anything. The number one key to health is sleeping. And if you're drinking a bunch of stuff before bed, then you got to get up and pee. So you break yourself out of that sleep cycle. You go to pee, then you're somewhat awake. You might check your phone, takes you a while to fall back asleep. You're losing really precious hours of sleep. Don't drink anything 3 hours before bed. That's the 3 part. The 2 part, don't eat anything 2 hours before bed. When you eat food, your body needs to digest it. You should never eat right before bed. You want to have a little bit of a fasting period while you're sleeping. You want your body relaxed. You don't want it overworked trying to digest a whole bunch of food that you just put into your belly before you lay down. Not a good idea. The 1. So we talked about the 3, we talked about the 2, the 1. No blue light 1 hour before bed. So you have 2 choices. Either you get rid of the phone and computer, which would be the best choice, or get these cool glasses like I have, which block blue light. So 3, 2, 1. I want you to try it. I want you to let me know in the comments if you've done it. And I want you to look at your subscribe button. If you watch all of my videos, you might be surprised to notice you haven't subscribed yet. So hit that subscribe. If you're on mobile right now and you're watching it horizontally, I want you to turn your mobile phone vertically and look at that subscribe button and hit it. And then I'll see you right back here in the next video. Do you want to know when to buy and when to sell? Click this video right now.